Good day from around the world. I'm Kyle Ellicott, your host for another edition of VCTV. It's Friday. What does that mean? We've got a ton of energy. We've got great investors, and we're going to be talking about fundraising. This is the common theme we talk about every day here on VCTV. But today, unlike previous episodes when we've talked about various technologies like artificial intelligence, space, deep technologies, blockchain, food, bio, med tech, you name it, we've talked about it here. Today, we're going to talk about the overarching climate of fundraising and what's happening around the world in different regions, along with the industry as a whole. So that way, you, our audience, can be educated if you're looking to make investments, where the opportunities are, where you should be paying attention to. And if you're fundraising, what to keep in mind going to fundraise over the next 6 to 12 months. A lot is happening, a lot is changing. You need to know this information to be prepared to be successful. Now, with that being said, thank you for joining us today. Big shout out to Elena and to the entire LATOKEN team for bringing VCTV to you, wherever you may be and whatever type of screen you're watching on. We appreciate everybody and you're tuning in. If you like what you're hearing today, make sure you click the subscribe button. And at any time, give us a thumbs up. We love them. And that way we can bring more great content to you. If you have comments, questions, it's Friday. A lot to talk about. Feel free to drop them in the comments box. I'll do my best to ask them in real time. If not, all of us, as you will find out, are available on social media just about 24/7. Or as Gary will tell us a little bit about, we might have smart assistants who can help respond a little faster to you as well. But we've got a great show for you. I don't want to take any more time, but again, a big shout out to Elena and to the entire LATOKEN team for making this possible today. Let's go ahead and introduce all of our investors who have joined us from around the world. Some old friends, hey, Mark, and some new ones, Maya and Mons, who are here. I want to welcome everybody, but let's go around with introductions, a little background, and then we'll get into the topic at hand. Eduardo, Brady Bunch style, you are right in my queue. I'm going to start with you. Introduction, a little background on yourself, please.
Yeah, thanks, Kylie. Thanks, Elena. Thanks to all the LATOKEN team. Again, a fantastic group of professionals and panelists, and very pleased to be here this Friday in this very interesting discussion. Actually, pretty much many people of the audience know me actually, so because I've been here also a few times before. I basically I'm the regional director for EMEA for large US family office. So we have experience on private equity, venture capital, also real estate and straight equities and bonds actually. Experience on fundraising. We are in the middle of an ICO also with blockchain, with fintech, within those particular areas of investments, artificial intelligence, that kind of things. And yeah, I mean, really looking forward at taking a look at Roberto's pitch and to give you my feedback. So yeah.
Wonderful. ICOs, STOs, IEOs, O's and O's and O's. We're going to come back on that topic. Yeah, we're going to come back to talk about that today as well. Next up, Mons, welcome to the show. We were talking a little offline. It's a pleasure to have you. Please, same as well. A little introduction, a little background on yourself, and we'll continue from there.
Thank you so much, Kyle. I basically run a consulting practice where we work with ventures across the world and help them with scaling up their businesses from all the way to early stage to mid stage to growth. And it's a total pleasure being here, and look forward to having some good insights from everyone.
Awesome. And do you focus on any particular industries or just stages?
Barring fintech, I found that I've been able to work with almost all ventures across. It doesn't take me much time to work with ventures and get them going. Thankfully, we have the gift of problem solving. But fintech is one area where we don't really focus way too much. Barring fintech, we are more than happy to work with ventures across.
Right on. Well, welcome to the show. Next up, the Grand Master, the Chief Architect, the biggest name in the game when it comes to artificial intelligence. Gary, welcome back to the show.
Who are you talking about? I am not sure who you're talking about.
I mean, I look at you and I see artificial intelligence the most beautiful way. But for everyone else out there, little intro, a little background on you.
Sure. My name's Gary Fowler, and I've done 15 startups. The biggest exit I've been involved with is Click Software. We sold for $1.35 billion 7 months ago. I started Eva, which is one of the top 10 AI companies in HR tech 4 years ago. It's about a $700 million company today. I own GSD. I'm the co-founder of GSD Venture Studios, which is a premier AI studio. And we scour the world to looking for the most incredible AI technologies that'll have an impact, from space tech to security. I mean, you name it. AI is the new electricity, and our job is to take companies that are wanting to grow to the next levels. So thanks.
Absolutely.
Again.
And hey, pleasure to have you. People are loving AI as the new electricity and agreeing and doing nothing but agreeing with you. And it's a powerful statement that to your audience, if you haven't heard much about, I guarantee you we're going to get into it. We're going to drop the word AI. If we haven't already 5 times, we're going to get there. So get ready. It's a very important topic. Maya, we got a chance to talk off show for just a few minutes. I want to welcome you. I did a little research before the show. You are outstanding and have a crazy, massive background. I'm excited to dive into today. You're also in a very exciting region that we've talked a little bit about on the show that I'm really interested to dive further into, because there's a lot of activity there. But I don't want to steal too much of your thunder. Just want to give you a good welcoming, but a little background, a little intro on yourself.
Yeah, great. My name is Maya Horgan-Famodu. I run a $10 million venture capital fund. We focus on Nigeria, Kenya, Ghana, and Egypt. We also recently launched a nonprofit, Ingressive for Good, and we do micro scholarships, technical skills development, and talent placement for African youth. As far as our fund, what differentiates us in the African market is about 80% of our own limited partners. So the investors in our fund run some of the world's top global funds. So the idea is that we're essentially a feeder fund for some of the world's top investment firms. Our portfolio ranges, we really like B2B technology or tech-enabled solutions, mainly companies, tech-enabled businesses that target Africa's traditional billion-dollar sectors, whether that's agriculture technology or energy technology, et cetera, financial services technology. That's mainly where we invest. And that's me.
I love it. And like I said, we've had the pleasure of having a few other guests from the region around here and have talked extensively about Africa. I'm incredibly bullish myself about it. I think there's some great opportunities. We talked a lot about fintech here as well and what's happening within the region. And funny enough, energy and agriculture came up a few episodes ago here on VCTV around Africa and the opportunity there. So get ready, we're coming back. And last but not least, and I got to grab my coffee. Mark, you went offline for a second there. Oh, I grabbed my cup of coffee to cheers my fellow coffee drinker. Mark, welcome back to the show in Seattle. It's a pleasure to have you. A little intro and background on yourself as well. Oh, Gary, I see you. I'll give you a cheers too.
No, as I said, coffee, Seattle. I mean, it goes hand in hand, right, from Starbucks. But my background is with the other big company here, with Microsoft. I retired about 10 years ago. I do investment, mostly angel investment since then. I'm a member of the Alliance of Angels, of Swan Fund, of the American Capital Association, and we invest in theoretically in any kind of early startups. We have a quite diverse portfolio. Based on the technology background, I'm in the blockchain space since about 2014. Written a couple of books in that space, but mostly driving investments. I'm also co-managing an investor group called Codex 3, the third generation of the ledger. We are angels and super angels north of California. So we do any kind of investment in the blockchain space. You mentioned all the IEOs. So we do tokens, we do equity, and anything in between. And always looking for interesting projects and teams.
Wonderful. Awesome. Well, everybody, welcome again to our audience. We got a great show for you. You got a huge diverse group of investors here. At any time, if you've got questions, drop them in. We've got plenty of time to talk about them today. And Roberto, I'll give you a quick shout out. We're going to get to you in the second half of the show, but you're sitting on camera for the next about 40 minutes. So I just wanted to say hi to you and make sure people knew you weren't just Zoom bombing us or anything. Instead, you're here and you're part of the show. So we'll get to you shortly. But panelists, investors, let's talk a little bit about something. And, like we talked about off show, past 6 months, we talked a lot here on VC TV about how the pandemic and just the world has changed around fundraising, okay, globally, right? But now let's talk about what things are happening currently and what does the next 6 to 12 months look like. So would love to get each of your opinions on the current state of fundraising, investment, and also what's to come in the future. So that may be you as a fund, so Maya and others that may have raised a fund recently, but also from a startup's perspective, how are you seeing your investments play out as well? So Eduardo, let's start back with you. What is the current state of fundraising as you see it today?
Yeah, thanks, Kylie. Well, actually, right now, and during this, particular area, I will say, of pandemics and global, challenges. Actually, we investors are finding, hard times actually when it comes to fundraising. I mean, we have postponed an ICO and an STO actually because of this kind of worryings of investors on a worldwide basis. But hopefully, I mean, we believe that the situation will come back to normal probably by the end of the year. Hopefully, we'll get new basically drugs and treatments for the disease, and investors will start changing their minds. But honestly, right now, actually, the market is quite silent when it comes to fundraising, and we are invested in particular industry that have been heavily hit by these kind of things, actually, which are basically, in our particular case, fintech, blockchain, and artificial intelligence. So, I mean, we are optimistic because we believe that probably after the summer, things will start to get normal. But we will see. I mean, who knows if there are other outbreaks in Europe. You're probably aware of the news. I mean, in Spain, we're having some problems. Also in some other countries such as Germany and France and Italy. But we are kind of optimistic for the latest month of the year, definitely.
Yeah, it's going to be a wild Q3 and Q4.
Exactly.
It could be a sprint to the holidays for sure, which will be interesting to see. Mark, how about yourself? I mean, you're invested in a similar industry as Eduardo, but also, I mean, you're here in the States and maybe seeing a little bit different, deal flow on the West Coast. What is the current state from your view of fundraising as it stands?
Yeah, I think it's a very, very, very interesting time in many ways, of course. On one side, I think we see a lot of cash on the sidelines. There has been so much money coming into the economy and companies through the government programs, but it has been also before, I think a lot of investors were starting to get out of the traditional equity markets and trying to figure out where can I get safety as well as in a return. It's really the hunt for the return that has been driving a lot of us over the last, I would say, 6-7 months, even pre-COVID. But what happened, I think, is over the last 4 or 5 months is the deal flow itself has changed. I think people are much more careful with new investments. On the other hand, though, there's a lot of interest, appetite to help existing portfolio companies. So companies that we are already invested in, we are engaging very closely with the leadership and making sure they have access to the latest information, to government programs, to have help and coaching of how to make sure they prepare themselves through this phase. And then, of course, if when necessary, we help with cash as well, because we want the companies to succeed. Those are the companies we've already built relationships in. We trust them. We've seen them moving forward and doing the right steps. And I think we're going to keep working with them for sure. through these times. Having said that, there is a huge appetite, as I said, for investments. I can tell you we are involved in a project outside of the blockchain space that raised $10 million, another path to closing 12 million just within the next, I would say, total fundraising time of 6 weeks. So I can't tell too much about it, but if it's the right spot and there are opportunities right now, there's nearly an unlimited amount of cash to go into those things.
Such a tease, giving us the intro, but pulling back. But
give it another
agree.
6 weeks and it's public. So yes, but I can tell you what it is. But it's
awesome.
It's really interesting.
Elena, let's call them out on that. 6 weeks, Mark, we're having you back. And
I
so
would be delighted.
6 weeks in one day. All right.
Sounds good.
So Gary.
Sounds good.
Elena's got you. We got you courted. So we're coming back to you on that. Get ready. Gary, to you, same question. I mean, what are you seeing? We talked a lot about this yesterday and the day before around, deep technologies, more infrastructure-based technologies for those who weren't able to tune in yesterday, and things like AI. What are you seeing as the current state of fundraising?
Well, so, I mean, it goes back to, I call the KISS principle, right? Keep it simple, stupid. So if you got a good team, you're focused in incredible technology, and you have revenue. I mean, I have a company that started a year ago that's doing over 10 million in revenue now. We'll double this year to 20. I got another one that's a recent startup that's at 2.7 with $100 million pipeline. I mean, so if you look at it, AI is the new electricity. And if we invest in things that are going to grow exponentially, this is the time. I mean, Warren Buffett doesn't go with the flow. You got to look at where's the opportunity. Now there are discounts. So I would look at one is revenue. I would look at the team first and foremost, and I would look at what that technology can do to the market and what kind of impact. So from my standpoint, I'm closing a $2 million round right now with one of my aging in place companies out of Japan. I think there is an appetite, but you got to find the right kind of investors. And we talked about it before, Kyle, this digital transformation, accepting that business is going to be done on Zoom, right? We've got to go with the new way of doing business. We can't stay in the old mindset. We really have to think differently. And now's the time to do it. And if you don't do it, and if they're slow, they're going to fall behind, because these opportunities, the next billion-dollar companies are there and ready to be invested in. So yes, you can put money on the sideline. I'm also an investor. I've created several large funds, a $10 million seed fund for my acceleration group out of Russia. I mean, it's the time. Now, I personally went through this situation. So in 1998, we brought a company over from Israel. We brought that company to the US. The market started, that was great, the internet boom. Then the market turned in 2000 and things died. They said we would never do an IPO on NASDAQ. March, it died. In June, I did the IPO. We raised money. Then they said we would never survive. We survived. That company, Click Software, which I was on the original management team, was sold for $1.35 billion in August of last year. So, and I'm not taking credit for the whole deal on it, but I can tell you that believing it and moving forward helped us. They said we were going to go bankrupt. We didn't. They said we wouldn't do a NASDAQ IPO, and we did. They said it couldn't be sold, and it was sold. So you have to, have the right grit and get stuff done. As I told you, my company, GSD Venture Studios, is Get Shit Done Venture Studios, because that's really what it's all about.
It's true. I mean, look, no matter what the climate is, things are going to be tough, right? That's the joy or the pain or something in between of building a company, right? You're putting yourself out there. It's not going to be easy. If it was easy, everyone would have done it.
Do it. Exactly.
Exactly.
And so it's always hard as an entrepreneur, right? It's never easy. If it was easy, there would be a lot more Mark Zuckerbergs, right? A lot more Peter Thiels. It would be a lot more Elon Musk, but it ain't easy. I mean,
absolutely.
So
and these types of times and kind of what we've seen this, and when I say times, I want to be very clear to the audience, since again, we're shifting coming into the second half of 2020. This is the time of opportunity. new markets, new services, new opportunities are being created that can be taken advantage of or shifted into. This is a very unique time to build or start building in and refocusing. And we've talked about it here on VCTV. I'm shamelessly plugging us, but it's true. Being an entrepreneur, similar to all of our guests and an investor as well, this is a big, big chance to shift or to try something new that, I mean, for the decades to come, the types of technologies we talk about are going to be here. And Maya, I want to come to you. I mean, you're based in in a region that's thriving, I would argue, in terms of opportunity, where you can build and investment. You've also just raised a fund. You're making investments. So you've got a big, broad picture of what the current state is around fundraising. Would love to hear your thoughts on this.
Yeah, my general thought. So I want to break it out into both investor to investor and then investor to portfolio company fundraising. And on the LP side, what I'm finding, or firstly, the general amongst the two, because I've been on a number of calls with both like limited partners and institutional funds, as well as other VC funds like this. What I find from the institutional, there's been a pullback on the H&I and family office as far as liquidity and
real quick, H&I, high net worth individuals. Continue.
Yes, high net worth individuals. And as far as liquidity and willingness to participate due to perceived wealth. And so I've noticed a sort of decline on that side. But institutional funds, as well as any other sort of institutional, like venture capital fund, private equity funds, we all have mandates and we all have required deployment of capital. And so even in a down market, we, just like every other organization, has to figure out how to continue to do business in a pandemic market or in a market where you have to do Zoom calls to close. You know, we fortunately closed our so we have a sovereign wealth fund and a number of high profile fund of funds from the US who've commit to the fund. And we've fortunately closed on them before the pandemic hit, but I've heard a number of them continuing to do investments and also understanding how they're going to get around the whole trust building in person. And then so that shifts me to the venture capital side and the actual people who are deploying funds into portfolio companies like us. Again, to reiterate that point, it's only going to negatively affect my IRR. And I don't know if you want to stop and explain that as well. But
no,
it's
you're
only
fine.
Going to
okay. Sometimes there's terms that may not be common to everyone, so I just wanted to jump in on that one. But sorry, continue. Yeah.
No problem. It's only going to jeopardize my IRR if I hold a bunch of my investors' money and don't deploy it because I don't have a market that I'm used to. It serves me to understand the new market as quickly as possible and understand the proxies that I have to develop for my traditional trust building, which is what we're all facing. And we just closed our largest investment to date about 3 weeks ago into a company, like I've never met the founders before. So, preceding the investment, I had never met them in person. Of course, we had our Zoom calls and but then there are so many ways. It's like when you're investing, you really have to break down, what am I trying to solve for in my diligence process where I do want to meet these people in person and where I do want to go to the office, and figure out ways in which you can solve for that, like doing more letters of or doing more recommendations, talking to the investors who've been working with them for years and understanding their experience, talking to their customers and doing extensive customer diligence, and also sitting or having individual Zoom calls with team members, ensuring, is there a unanimous understanding of the mission and the vision of the business? Is what they say, is what the CEO says exactly what the analysts and the salespeople are saying? There are ways that you can solve for those proxies for trust building. And the market is different. And there are some places where I'm just not going to participate because I'm like, I don't know what's going to happen to that in a month. Like, probably not going to do a lot of hospitality or travel. Flights are not a thing right now. Yeah, and like that's to say, like, we saw a private jet company in Nigeria that was his valuation was around 60 million, maybe 5 months ago now. And now they're at about a 7 million and then just dropped a little bit further. So like those industries we're taking a break from. But as far as companies that are focused on remote work services, as far as businesses that are focused on anything that brings transparency to balance sheets and helps founders optimize on margins, on performance, on tracking of inventory, things like that, as well as your traditional B2C or B2B financial services, infrastructure, internet, things that are really thriving in this market and will continue to thrive after COVID. That's what we're really excited about.
That's awesome. You bring up a really solid point that I think tends to be forgotten, and that's diligence. And diligence in a time where, you know, we're not able to meet as much in person is very focused around going longer in that diligence process. Traditionally, it's been, hey, we like you. Let's have a few meetings. Let's go through your Dropbox folder, and you know, if we have any questions, we'll follow up. If not, let's go to town. Obviously, I'm simplifying it, but that's where it was traditionally. Now you're bringing up. We've talked about it here before, and even further, it's like diligence is not just about a Dropbox folder. It's not just about one conversation. It's multiple conversations. Team members, be prepared to allow your team members to talk with investors. You're going to get, you know, asked for recommendations, customer recommendations, investor. Why you're bringing up a good point. That's typically kind of just been pushed to the sidelines because people just think, oh, well, it's just going to be just as fast. No. Take time. I mean, how long, just curious, the company you mentioned again, how long was it from when you first met them to when you guys decided to make the investment? Is that period?
So interestingly enough, so when we are, it was, so to kill the punchline at the beginning, oops, it was shorter in this period, actually, including this investment was shorter because, mind you, I live in Lagos, which has the top 3 worst traffic in the world. So in those, even if I am having significantly less, founder interactions, and I'm just maybe going to their office, having a coffee 2-3 times, my days are typically filled with 2 hours of traffic in the morning, 2 hours of traffic in the evening, or something along that. So it's just to even get to them. And this is a very specific Nigeria factor. The infrastructure really sucks. And so having those in-person meetings takes up a lot of my day, and causes just that, the transport and the logistics alone causes deals to be delayed. And the other thing is, it's actually quite a quick process to be able to schedule 30-minute, 45-minute, boom, 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 customer service calls and investor review calls, et cetera, as opposed to this nebulous thing of like, my gut tells me that the founder's the one. You know, this is really based on true and solid facts that you can solve for them sort of instantaneously. So we found that the real factual diligence points, the quantitative and tangible information that we needed to be able to assess the competence, the integrity, the trustworthiness of the founder based on their interactions with their customers, peers, employees, and investors is a relatively streamlined process. So this one, it took us about 1 month from the time we had our first meeting to the time when we wired the check, whereas it normally can take about between 45 and 90 days when we have our usual market dynamics where my day is filled with, you know, investor pitches and, you know, traveling to the mainland and all that kind of stuff.
The fun yet boring stuff. And I joke because it was mentioned on yesterday's call. Mark's even getting a little smile about that over there too. It's you're right. I mean, now you don't have to travel, so that time you have available is actually increased, which means now you're not going back and forth, you know, bouncing between people's schedules, and so things can appear faster, but there's still a higher frequency, I think is the point here. So again, rather than a few meetings in a 45 to 90 day period and some other things, instead there's a lot more happening in a shorter amount of period. So founders, take note. Thank you, Maya. Mons, I want to come to you. Same to you. I mean, you're working with companies at early, mid, growth stage. I know it's different between all of these, but what are you seeing in terms of the overall fundraising landscape right now, currently with these companies that you may be working with?
So I'll be very specific to India at the moment. Looking at the data right now, we had 50 deals happening per month between January to April. And right now, as we look at May 2020, we've had just 20. So the VC investments are definitely coming down in terms of the number of deals which are there. In terms of value of investments, the amount invested in May 2020 is 1/4 that what was invested in May 2019. This is again, I'm keeping it very specific to India. As some of the panel members shared right now, obviously most of the rounds which are happening less into newer ventures, and they're more in rounds or bridge rounds, where you have already established the trust with the founders and the founding team. You have some understanding with respect to the capability and what the traction in the market looks like, whether there's an opportunity where they can operate and probably get some advantage if they were to double down in terms of the new landscape which is there. Early stage investments, again, looking at the figures, it's it used to be 60% of startups in 2019, and right now it's only 16% of startups in 2020. So that's something which is there. But having said that, to Gary's point, I think Gary had mentioned about the team and the new and Maya had mentioned about the opportunities out there. If you look at specific to India, you would have definitely heard of a company called Reliance Geo Platforms. So they raised something like $15.5 billion by selling just a 25% stake since April this year. So that's that's a company which is owned by Mukesh Ambani, the richest Indian, and currently they have a valuation of $65 billion. Where we see some of the investments going down in terms of other sectors, we also have sectors such as fintech, healthcare, and edtech, which are now taking a lead given the new landscape. So we look at things like increased data consumption. We look at offline behavior coming to online. We look at concepts like social distancing. We look like things like zero touch policy, digital transactions going up. There's also a need for loans because obviously the times are such that a lot of things are definitely going down in terms of businesses in quite a few sectors, in terms of also an upcoming recession which is out there, right? So coming specifically again to the sectors which are seeing some investments, we've seen 14 edtech startups raise venture capital funding in India. For healthcare, it's 8 startups. For fintech, it's 11 startups. There's one more concern which we're looking at. You mentioned that we should not, talk about politics, so I'll keep it just a single line. We have some, so we have, we are looking at some border skirmish, and there's some India-China thing which is happening. So that's going to, have an impact in terms of outside investments, and but it also opens up investments from others. For example, Sequoia has right now launched a $1.3 billion fund, which is very specific to Southeast Asia and India. So it'll be interesting in the upcoming months, but it's definitely going to be, played to a huge extent. It's going to be dictated by the kind of team that you have, the kind of capability in terms of execution that you'll bring to the table, and how you're able to leverage and keep your head down. Either try to survive, cut down all the burn, and just try to focus on where the company needs to survive, or if you're in a position where you can actually leverage on the new landscape, how you're able to really work on it and double down. So that's something we are seeing in India right now.
That's amazing. And I think you bring up another point around just Southeast Asia and some of the activity there. Is it's very important right now to also focus on your customers, focus on what could be your localized market, right? Traditionally, companies wanted to go big day one, be the biggest company in the world. And it's like, okay, let's take a pause. Let's focus on our local markets. Let's focus on our core product, and let's still be a global company and grow into that, right? Maybe it's not necessary to launch 5 new locations around the world. Instead, focus on, for the companies you mentioned, focus on the India market, right? Focus on the Korean market, focus on the Indonesia market, because those markets are aplenty. And when you succeed locally, you can have a better chance of success globally. And to Maya's point as well, and yours is, investors, you really want to look at capital local and then start to succeed and go global. When Maya comes back to you, and I imagine she may comment further on this, she's going to call your previous investors, like she said, and she's going to want to know who those investors are. Why did they invest in you in those local markets? And what changes have you had? And that's very important. So very, very important to those out there is focus on those local markets now more than ever, because again, things have changed in the dynamic. Mark, you've got to come and go for it.
No, absolutely. I really said, of course, I have to pitch one of our companies, but like when you mentioned Indonesia, and I think that track that So PundiX, when I met the investor, so the two founders, we brought them to Davos. We go to Davos every year. We take the CEOs of some of our companies with us. The last year was Rune from Maker. And I think 3 years ago, we took the guys from PundiX. So we're basically just trying to figure out how do we get access to completely unbanked farmers in Indonesia to the financial system, access to insurance markets, so all kinds of things that they just didn't have access to. And we help them to get access to capital, but also to advisors, I think, around the board. And they're now active in, I think, 30 countries. The team is doing quite well. We have, of course, been very happy with our investments. They're launching now from the Plus purely payment. They launched their own chain, like the FX change is now live as well. So testnet is live. So it's great to see teams and help them to develop from a specific scenario, really global, I think really globally, and see them striving. And this is just one of the highlights, I think, for us as investors, to see entrepreneurs succeeding.
And you and Mons also brought up some good points. So Mons brought up microloans and insurance, or excuse me, education. You brought up insurance tech in general. Where, Mark, I'm going to start with you back, is where are the areas of opportunity right now that you're seeing? So where are you seeing money that's either or industries that are plentiful for cash investment, or that you're starting to look at, to Maya's point, that you're learning as rapidly as you can because that's going to be a hot sector? Where are the opportunities?
So, I mean, Maya, Gary, I mean, you guys make very, very good points. I mean, the world is completely changing. You're absolutely right. I think companies, we are getting used to this, or those companies and organizations that are getting used to working in the virtual world, on a global scale, leveraging talent from all around the world, enabling and unlocking that talent and the experiences. I think those are the companies we're going after. And it can be, often they're startups, and we're looking for them, of course, but it's also, I think, established players. If you see how well companies, let's say like Amazon, Best Buy, and Costco adapted to the new world versus traditional players that were far behind, I think we will see very, very quickly divergence, and we see them already in those industries. And I think it's a huge opportunity for startups. I mean, the event space has changed completely from a full calendar around the world. And I would say I do miss drinks on rooftops in Singapore. I have to say that was definitely something I had good memories of, and I was looking forward this year. But Maya said it before. I mean, if you don't have to commute, you're working from your office globally, it's so much easier to get things done efficiently. And I think Gary mentioned earlier, it's about the teams, the trust you have in those teams. If you can build on relationships, you can build on referrals, that people are real, things can move very, very quickly.
I think you're spot on, Gary. I mean, what are you seeing as opportunities? We talked a lot about some of these areas yesterday, but I think you might have a few more as well. So what are you seeing as areas of opportunity for investment right now?
I mean, anything, anything, as Mark said, that aids in a digital transformation. And the key, I wrote an article, I don't know if it was in Forbes or on Medium, but about intergenerational teams. We got to look differently, right? We need people that have experience as part of these teams. I think we talked about this before, Kyle, but we need to have those kind of experience, because we can have a founder, but we have to have people that have the contacts. Contacts are incredibly important. I've heard it time and time again today. It's about having that network and the contacts. And if people have invested in you before, if they know who you are, it's surely a lot easier to raise money. That's door number one. Multicultural teams, diversity gives a lot of opportunity. In fact, on the board of GSD as one of the board members of the NAACP, and I did this, a year ago, right? And I did it because diversity is critically important. And then at the same time, regionally diverse. Use teams. So I have R&D teams in Russia, Belarus, Ukraine, Israel. I look for the best talent. Create a mix. Who mixes the best? So if you have a marketing person and then you got a technology co-founder, have a mixed team so you have different ideas. But today it's critically important. Contacts and the connections. and is a way to the money. You got to have trust. If they know who you are, there's a whole lot better chance they're going to invest in you.
And you bring up the regional diverse team as well. I think that's incredibly important. In the past, that was looked at as a negative in some cases. Yeah. And now it's more important than ever because, to your point, the best talent may not be right next door to you. The best talent may be somewhere else in the world. We're here on Zoom. We're all over the world, as I know, and our viewers will find out as they do a little research on us. And we're all here together. There's no reason those types of things can't happen. It's a little bit of an adjustment, nonetheless, in terms of time zones, but still, the best people for the best job is definitely something to pay attention to.
Teams of the future, right? I mean, this is the future. The future's now. Either you buy into it and use it and take this other medium, or you stay in the physical world and you fail. Right. So what are you going to do? If you want to go global, Kyle, today, right? You want to go global and you're in Russia, you're in the Ukraine, you're in Nigeria. How do you do it? You have to have the connections, especially, Silicon Valley still today is a bastion of opportunity because 50% of the money is still located there, right? Yep. And so it's a good place for the port to the rest of the world. So if you have that, we focus on growth stage companies, right? They start to revenue. But if you've got that, and you've got that opportunity to go to a port, have a team, part of your team located there. Mm-hmm. It's fantastic. Mm-hmm. My partner's in Moscow, right? He's American in Moscow. We broke our team up because of a lot of our startups are located there. So go have somebody located in that area. It's good to be decentralized these days. I know before it didn't used to be, but today it's a good thing.
It is. There's so much more that can be done. And to your point, again, the talent, the resources, the knowledge, and going back to resources, the local resources versus the global, that increased network and again, increased knowledge is just so huge. And Maya, I want to come to you. I mean, same kind of question. What areas of opportunity, but anything else to add on Gary's point as well?
Yeah, as far as requiring talent on ground, there's a little bit of that. And I just want to reiterate the importance of, particularly if you're investing in emerging markets, how necessary and essential it is to have team members on ground, because for a few reasons, as far as we want to make sure it's as democratized as possible. Anyone from any background with zero connections to us can apply, can be funded. That's why we accept applications on our online portal. We just want the best of the best companies. You don't have to have connections in order to apply. But as far as once we make that investment, our main offering is access to market through connections and introductions and access to later stage capital. And the unfortunate part of working in emerging markets where government systems, et cetera, are still fairly nepotistic, and also where there's low trust because of all the historical corruption, et cetera, people really do deals, especially in the high level corporate and government level, with people that they know. And so to reiterate that point of why it's important to have people on ground, just in and of, it's really hard to close a deal, especially in a more sort of offline. I'm not sure what Russia's like. I'm not sure how other places are, but on the continent, people still do business like memos. Somebody wants to update you on something, they type up a memo, they print it out, they sign it, they put their company stamp on it, and they send it to you. And you don't accept it unless it has the letterhead, like nonsense, or whatever you want to call it. So it's so essential to have people on the ground for that part. And secondly, because of how fast things move in the market, like macroeconomically, micro, things change overnight. Like in Africa, in Nigeria specifically, the regulation changes rapidly. You can have a business that is scaling, you have 30% week over week, 100% week over, like crazy growth. And I've seen this from companies we were in the middle of diligence on. And all of a sudden there's overnight regulation change in the requirements of minimum balances for financial services companies. And it shut down half of the companies in the market. Or, this ride hailing, scooters, motorcycle taxis type thing that's really taken off on the continent. In Lagos State, a city of 20 million people, one of the biggest growth regions for these models that have been really picking up on the continent. As you guys mentioned, China Sequoia invested over $100 million in OPay, which is in Nigeria, and it's a ride-hailing company and financial services are business. The businesses were, essentially shut down from their main operations overnight because in one day you can do motorcycle taxis and the next day illegal. And so just being on ground and having your ear to the ground and listening to what's happening in policy changes, having your relationships across the board so you can get those updates. We have unique risks here that people don't have anywhere else in the world. And so that's just to reiterate that point. And then on as far as what we're looking at, the type of businesses that we're looking at, on that note, so of course the pandemic and even just realizing how impactful regulation changes can be on the success of our business. And this even happens in the US. I have a friend who had a home healthcare business where it was like Uber for home nurses. And there was a slight regulation change that literally shut down his business overnight. I think he raised about $60 million. They were scaling all across the US. They had employed, tens of thousands of people, literally shut down the business overnight. So just to be aware of those things. So one, in our diligence and what we look for, and what we sort of try to optimize and look out for is companies that have excessive regulatory exposure. So the places we know that there are a lot of pieces moving in the African market, specifically within financial services, we have to be very careful. It's the highest growth business space, and it has been for the last decade on the continent, but also it's the most risky, namely because of that. And mobility as well. And then as far as generally where we're looking, I'm assuming people have limited understanding of the African market. So just to provide a couple high level facts that sort of explain why we do what we do. So there are 1.2 billion people on the continent. 70% of them are under the age of 35. So it's a very young population. There's about 93% mobile penetration. And that includes 650 million mobile users, which is more than the US and UK combined. So there are a lot of people who are tech enabled. There are a lot of people online, and they're very young. It also has the fastest growing middle class in the world, which means that we're investing in companies now that are on the B2C side. They might be lower margin, but they're significantly high volume because of how big the populations are. And the other side, so that's on the one side on the B2C. The other side is a lot of businesses are fairly not tech enabled in any capacity, and just bringing basic accounting software on our online software or basic marketplace software, anything that connects buyers and sellers, whether you have a trading platform. One of the companies we recently invested in was a financial services product that just connected buyers and sellers for market access. And so just basic marketplace plays, things that bring transparency on either side, and the like, and basic sort of business processes and accounting software. We also look at generally internet and connectivity devices. So things that allow the typical African consumer to go online. MTN Nigeria was one of the most successful VC, I guess, or tech investments in history. They came here thinking they'd sell about 5,000 phone lines, and now they're at about 150 million in Nigeria alone. So anything in the telecommunications, internet, ISP, that space as well is what we're looking at. And then lastly, energy and logistics, like port, shipment, anything to digitize that process, because it's so outdated, it's so archaic.
Maya, I'll reach out directly. We do like Alliance of Angels, we do office hours, and usually we have companies from the Pacific Northwest here, but we just had a company from Nigeria in the phone space. So I definitely would love to get your feedback there as well.
Look at that, to Gary's
Happy
point.
to chat.
The new way of business. This is how we do things. So it's perfect. Got a good connection for you guys. Thank you, Maya. Eduardo, to you, same question, kind of what are you seeing as areas of opportunities? And as we get to this, Roberto, get ready. We're about to come to your segment here in just a moment. But Eduardo, what are you seeing as areas of opportunity in terms of technologies or industries that are really important going forward in the next 6 to 12?
Yeah, definitely. I fully agree with something that Gary mentioned. I mean, the artificial intelligence sector is right now like the former electricity. I mean, basically, we have a tremendous interest in all things related to artificial intelligence. Although we gotta say that after having analyzed a number of investments on a worldwide basis, we gotta say that probably. Just 1% of the companies that they say or that they try to be linked to artificial intelligence are actually real artificial intelligence technology companies, because you know that as this is a hot topic, actually pretty much all the CEOs and founders try to say that they are an artificial intelligence company. Well, they are not. So this is why something that also the panel have been discussing lately regarding to people takes more importance than ever, actually. I mean, for example, we take many, I would say, weeks in order to properly understand the dynamics, not only of the industry and on market competition of a particular company, but also the management team, which is behind the company. And what are the alignments of that team with the company, with the future of the business? Because for us, this is critical. I mean, we try to be smart money. So when we invest in a company, we want to be there for a long time. So this is why also people is very interesting. So yeah, I would say that pretty much artificial intelligence, also internet and digitalization, companies, that kind of thing are hot topics right now, actually, when it comes to investments. And also esports and gaming, I would say, because probably in this era of pandemics, people have been at home, trying to spend some time with friends, meeting new people on a worldwide basis. So yeah, again, a very interesting area to invest.
Absolutely. We didn't even get a chance to get into esports and gaming, which I know you love, as do I. And we've talked a little bit about here on VCTV, but we're going to pause right here. Guys, we're going to get to our next segment of the show. And this part of the segment, or the show, excuse me, is exciting and thrilling. And after this, we've got even more to come. So right now, Roberto is going to get ready, and Roberto is going to pitch his startup to us. This is something we do here on VCTV each week. We allow a few companies to come online and pitch us as investors and you, our audience. Roberto is the lucky chosen one today. So Roberto, you'll have 5 minutes to present your company, as I said earlier before show, and hard 5 minutes. So we'll cut you off afterwards. Each of us as investors and judges today will give Roberto a little feedback on his company, his project as well. And then afterwards, the next half of the show is very critical to you, our audience. This is where we're going to dive a little bit more deeper, a little bit more technical around our topic of fundraising. Where are the new vehicles? We're going to talk a little bit about this ICO, IEO, STO. Where are the new vehicles, the new fundraising opportunities that you can look at to start raising capital? For investors, we're going to dive a little bit more deeper in those opportunity areas to make sure you are prepared. And founders, back to you, advice. How you can be successful for the next 6 to 12. It's going to be a tough road ahead, but there are ways to do it. And we're going to talk all about that in our second half of the show. So without further ado, judges, now no longer investors, but judges, get your pen and paper ready. Roberto, go ahead and share your screen if you can, please. And as soon as you do, we'll go ahead and kick you off with 5 minutes. All right. So, Roberto, it's all you. Make sure you unmute yourself, and then we are ready to go. Oh, Roberto, you're still muted. Make sure you do have that unmute.
Now you are listening?
Loud and clear. 5 minutes is yours. Go.
Okay. SpotCash 1, the new era of fan engagement and fundraising is here. We reward your passion for sport and esport. What we offer: customized fan engagement and fundraising platform powered by a social e-commerce gamification built on LATOKEN. What's the problem we solve? Fan engagement. With low fan engagement comes empty seats in stadium. Fundraising, it's a constant struggle for clubs to find funds and sponsor. Our solutions are tokenization and social e-commerce. A sport token issued by a club or league association will provide multiple benefits, like increasing funding, with the integration in a custom social e-commerce and sponsorship crowdfunding system. Sport e-sport market side validation. The overall sport market is expected to grow by 2023 at annual growth of 18%. Ad spend will see an annual growth rate of 8%. Size of blockchain market 2020 is near $200 billion US. Some of the best teams in the world have a token: Juventus, Barcelona, Paris Saint-Germain, Roma, and other top teams. How we can help sport and sport organization? Raise funds by selling your custom cryptocurrency to fans, athletes, brands, or traders. Engage more fans with a custom social e-commerce and gamification loyalty program with voting system. Manage all your custom data and stats. Take advantage of cheap and fast international transaction. Our products are DEX Exchange, Wallet, and social e-commerce. The social platform integration with the DEX has made exchange and transfer of in-game cryptocurrency fast and easy for the world and gaming. The exchange and wallet are your gateway to the social e-commerce. The social e-commerce provides better level of presentation, privacy, and engagement. Take full control of your data and staff. The platform has a reward and gamification system powered by our Scones coin. Fans and brands can even use it for voting or to make donation and sponsorship. Club and organization, first step to goal. Create your club tokens with a dedicated economy. Sell tokens to your fans or partners and raise funds. Engage fans with a cryptocurrency reward gamification and voting system. Sell more product and advertising with your custom data and stats. Why invest in SpotCash One? How we generate profit? Sconet branded product, club and athlete tokenization, loyalty program and data management, sell customized product, advertising revenue on our social platform, fees on transaction, commission on e-commerce and sponsorship. The SpotCash One social network with 2-month traction start. We have some of the best world athletes registered in our public platform. Before the release of our token, 5 world champions, 200 athletes and brands registered, 25% weekly returning visitor, user and visitor from 120 countries. Our competitors, Socio, high cost transaction, no customization product. Spotify, not for fans, high cost commission, no customization. Centauro e-commerce, low engagement with customers, no gamification. SpotCash One offers better customization and cheap transaction cost with a large ecosystem. The Scones token run on Waves blockchain. Some use case for the Scones token, main token for trading other sport token and e-sport in our exchange. Reward for be active in the social e-commerce, gamification for fan engagement, crowdfunding and sponsorship. Voting for club and organization decision, sell item or service and ticket. We offer standard and customization product package. You can test some of our product already. We expected a growth rate of 100K athletes and club and much more fans for this year, and partnership for tokenization with 5 major leagues and clubs. We have a professional international team of talents in the sport and blockchain area with more than 20 years of experience. Our expansion plan starts from Brazil, where our company is registered, but we have already at least club and visitor from 120 countries. We plan to move a branch of our company in Europe and Asia in the future. Thanks for listening. I'm Roberto Moretto, CEO of SpotCash One.
Roberto, thank you so much. And by the way, we were talking offline, 5 minutes was going to be tight. You hit it right on the dot. So congratulations. You didn't have any problem. Good job. So thank you very much to our judges. Guys, I want to make sure Roberto gets a little bit of feedback. So I'm going to come around to each of you, see if you guys have any comments or questions. Again, Roberto, thank you as well for your presentation today. Eduardo, let's start with you. This is an area that you know very much about, being in blockchain, but also in gaming and esports. Any feedback or comments back to Roberto on his pitch?
Yeah, exactly. I mean, first of all, Roberto, thanks for the pitch. Actually, I believe that the presentation is, looks cool. Actually, in my particular opinion, maybe a little bit dense at some point at certain slides, actually, but in general terms, I think it's a good presentation, actually. And when it comes to the business proposition, actually, I fully agree with Kylie. I mean, definitely gaming, sports, and everything linked to ICOs and gamification is a very hot topic. Actually, right now, investors are looking to, invest on a very safe way in these kind of businesses that have been booming lately, particularly those related to social media, because people tend to use also gaming to meet other, players around the world, actually. And subscription services are also booming, such as PS Now, also Xbox Live Pass. And I definitely believe that these kind of companies, such as yours, will help boost, particularly, let's say, indies and studios which are not big names and that they're looking for financing, actually, and they're having problems because of these subscription services or large, e-gaming and e-sports companies. Also for teams, for example, in Spain, we have a number of teams that have been actively raising money in order to become significant names in the e-gaming industry on a worldwide basis. So yeah, definitely, I believe that there's a strong potential and something that we will definitely look into it. So congrats.
Thank you.
Awesome. And to Eduardo's point, Roberto, it takes a lot to get up on stage, whether it's virtual or real, and share what you've built and your passion. So again, congratulations and thank you for taking that time. Mark, to you, sir, this is again something of area of expertise being in the blockchain space. Any comments or feedback for Roberto?
No, definitely. So first of all, Roberto, thank you very much for the presentation. I say it's always a challenge, especially in this virtual world. How do you make sure you're actually connecting with the audience and bringing your story across? So getting it down to 5 minutes, it's a big achievement. So congratulations. Second, the whole gaming, esports in a distributed environment, there's definitely opportunity there. So there's people love sports. Why do they subscribe to cable TV? We just had a report again. It's like with the drop in live sports, cable TV numbers are going down. So people are missing their sports. A question, of course, I would love to see. Having said that, there are a couple of questions I would love to see addressed in the pitch. One is you can't talk about sports without mentioning COVID. So what is going to happen without live sports? What's the focus on esports? So you're really having a clear story and addressing it up front, I think will help people to engage and see where this could go. There might even be an opportunity, I think, with your global presence and looking into hyper-local. So what's happening in different countries? I mean, there's the global sport, of course, but there might be something on the local level as well. I would just look into that. Then what I was missing is more about the competition, because I think you're not the only company in that space. So there's definitely things out there, and competition is not a bad thing. It just means other people see that there is a business opportunity, but how do you position yourself? Have you looked at them? So just giving me as an investor confidence that you are super well aware of which space you're going in, who are the other players in there, and how you're going to attack it, and playing a successful role in there. Last but not least, I think a little bit, or two things actually more. Two more things. One is a little bit more on predictions and numbers. So what's the revenue numbers? What's in it for me as an investor? I mean, at the end of the day, I don't really care where I put my money. I want to make sure I get it back and I get it multiplied. So what's the story for me here? So I really need to hear more about this. And then just the last area is really about compliance. You're registered in Brazil. There's a lot of other countries out there you're active in. What about the US? What about, I don't know, Malta, whatever? How do you make sure you're compliant with anti-money laundering, know your customer rule, but also the gambling rules that potentially come in play there? So again, it's all hard to cover this in 5 minutes, but what I as an investor want to see is that you have thought about it. And then I can, in due diligence and further conversation, I can drill down into those areas. But giving me a well-rounded picture that you have looked at all of those areas will really help.
Absolutely. Monts, to you, same thing. Any comments or feedback for Roberto? And Roberto, thank you for listening. I know we're just throwing stuff at you, so you haven't had a chance to respond, but do appreciate all the great feedback you're getting. This is gold in some cases. So Monts, continue.
First things first, it's definitely very difficult to cover everything in 5 minutes. So thank you, Roberto, for the presentation. I definitely do not have as much expertise in blockchain as other members, so I'll be extremely respectful and keep my feedback very specific in terms of whatever little I understand. Do try to cover more in terms of the team, the capabilities, the networks, and how you're going to take on the competition, and what makes your team win against others. If you're able to get that across in your first impression or your first few impressions with the investor, you have a better chance at succeeding. So I wish you the best. I'm not going to take up much of your time. Like I said, I leave it to the other panel members. Thank you.
Gary. Thank you, Monts. Gary.
Yeah, so one of the things that you want to do when you're online is you want to change the tone of your voice. It's very, very important to do that to capture people's attention. So the other thing is a wow statement. What is going to captivate them, enrich them, and grab their soul? So you need a statement like that. So, and I know I do presentations in Russian, and in Russian I have to practice and practice and practice because of my intonations. The other thing is your revenue numbers. I mean, I forget who said it, but revenue numbers are critically important. And you've got to focus on that because Mark said it. So if you look at it, how in the world are you going to get a payback and over what period of time? What's it going to look like, right? And do you have any revenue today? Is there any revenue now? Is it early stage company? What stage are you in?
Roberto, that's a question for you.
Yeah, Roberto, do you have revenue?
So okay. No, at this moment, we don't have a revenue.
I mean, but those are the kind of things you want to say up front. We're an early stage company, but we think we're going to dominate this space. And the reason why is because we have the best team on the planet Earth that can do it.
We offer that at the moment, yeah, for sure.
I mean, that's what you got to do. I ran an accelerator, one of the largest, actually the largest private accelerator in the world. I started it. So I can tell you directly, having to go through this, and there's lots of things we can talk about, but those are the kind of things that are important because they're going to bet on you, right? Early stage startups, the thing they want to do is they're going to bet on you and trust you. So you got to come out as, why am I the best person to be able to get this thing done? And why is it, I mean, there's other questions with GDPR and compliance and personal data protection, et cetera. Those are other issues. The other thing you want to think about, your advisory board. I don't know. I didn't see it. Did I miss a slide? Do you have an advisory board?
Yes, we have one from USA. Greg is an old guy from USA working for us with 1.5 years, something like that.
Remember, I call it the Keep It Simple Stupid program, right? Let me tell you how I work, because I'm just a country.
We have one two-time Olympic that is with us, Brenda Riley. He's been 2 times in the Olympic Games, competing with Great Britain. And I'm representing the International Surfing Association, that is government for the surf and stand-up paddling.
But Roberto, Roberto, you got to talk about those things, right? The other thing, listen, when you're building an advisory board, I'm going to call it the rule of threes. It's very, very simple. What kind of issues have already come up in this phone call? That is security and privacy. So one of the things that I would strongly suggest, so what I do is Rick Orloff, who's a former chief security officer at Apple, I put him on the board of my companies, right? Because it's going to come up, security and privacy. And if you got one of the best guys in the world, second, or ladies in the world. Second, what else comes up? The other question is access to capital. So what I do, because we're in the States, although it works a lot around the world, you find somebody that's graduated from Stanford and well-known in the VC community, like Bill Reichert or Guy Kawasaki, somebody like that that's really well-known. I put Bill on my company, right? And then you want to find the rule of threes, somebody that's had an exit. So just like you said about somebody in gaming that's in the space, that's had an exit or pretty well known, that can actually advise you and help you. Just, these are like the simple steps to do it. So I think you've got, it sounds, I'm not an e-gaming guy, but I can tell you how to build a company. And I think you've got, if you focus on that, you want to make everybody feel comfortable. And especially when you're online like this, and they may not be able to meet you how much are you raising? By the way, I don't know. Did I miss it?
Yeah, let me move to. Yeah, one thing about the revenue and the raising. How much we have raised.
How much money are you raising?
Yeah, until now we have built all our product. We have a solid. We have already athletes, professional on board, world champions, but we have not raised money. We have not selling token.
That's
so
okay.
We have
the thing is, Roberto, you got to say, okay, well, you haven't raised money, but how much are you raising? How much do you want to raise?
How much we want to raise. This depends when we will start to raise money. In this moment, we have just approached from a venture firm that we will probably next week.
But how much are you going to raise?
Yeah, we are looking for near 2 million.
Okay, but
So
you
to
can't
Gary's point,
say that to listen, when we're on the phone or on Zoom like this, you got to have direct answers, right? Because you don't have an ask. I mean, if I wanted to invest in it, I wouldn't invest because I don't even know what you want. Right.
So to summarize real quick, Roberto, thank you, Gary. Gary's making some great points. And Maya, I'm coming to you next. To summarize, one of the things that you want to be mindful of is that story you're telling and making sure to get out the information that investors want to hear, right? Revenues, the team, including your advisors, how much you're raising, the ask. These are the types of things you want to make sure are part of that. And going back to the tone is you're telling a story. Right? It's not a sales pitch, 1, 2, 4. You're telling a very flowing story. We want to make sure we understand the whole picture and all of the pieces that we can then dive further into. And also we want to feel your passion for this, because if you're not passionate, it's something you're not going to be doing in 6 months. So we want to feel that. So from a sports perspective, tell us, and I'm going to use Eduardo as the example, that you were a gamer for 10 years and you love sports. And as a fan, you just wish you could have more engagement. And because of that, you decided with your team to build this new product. So get into that story and not so much just reading from the slides, and also give those 2 new type of metrics that Gary mentioned. But again, it's a big process. It takes a lot of guts to get up here and do this live. You're doing a great, great job. This is just good feedback for your next pitch to just rock it out, close that check, and just make life happen. So Maya, to you, any other feedback or comments to Roberto? Because we beat you up a little bit, but it's all for good feedback. Trust me.
Yeah.
So
first of all, it was a very interesting pitch. I know nothing about this space, so I'm a little lost, I'm gonna be honest with you, but great job. So firstly, before any feedback, great job. And to reiterate, so I don't have a whole lot of new things to comment on, but just want to provide a little bit of clarity. So 1, the reason for asking about the revenue is because the reason I'll leave this to me. I want to understand your product market fit and whether consumers are willing to pay for whatever it is. That's a really good demonstration of product market fit, as in people actually want what you're building. And so revenue is one way to assess for that, as in recurring sales, people, engaging with the platform. But the other way is users. So even if you don't necessarily have revenue right now, how many users do you have? And actually, that's a real question. How many users do you have on the platform, assuming you have launched? If not, that's one thing too. You can say, we're pre-launch, et cetera, et cetera. But if you've launched, how many people are on the platform and what is the retention? So somebody comes on once and then they never use it again, or this is something where they come on your platform and they want to use it every day. So what is the MAU, the DAU, write down these words, because you'll definitely, these, especially building a B2C, a company that is online and gaming, the key metrics that you will care about more than anything else will be MAU, DAU. So you want to know your monthly active users, your daily active users, your weekly active users, your retention, and your churn. So churn is how quickly do people just fall off the platform and stop using it? What's the LTV? What's the lifetime value of the users on your platform? These are all things you really should have in your back pocket. And there should have been, I would like to see, for somebody who's building a gaming product, I need to see those front and center, because the core of success of gaming is your ability to get in the minds of your users and build something that's so addictive and so engaging that they're always going to want to use it. So just to explain that revenue and what's the point of it, that's part of it. But the other reason that we're all, I think, or that I am asking about revenue is because I also want to understand the sustainability of your business model. So is this something that it costs you, between cloud hosting and developers building and whatever marketing expenses, it costs you, $100 versus you're only making $1 in revenue, and that's sort of the long-term projections of the business. Obviously, I'm just using simple numbers, but I want to understand the viability of your business model, especially because we're in pandemic times. So now I anticipate that fundraising is going to be, twice as hard, if not a few single numbers higher than that, to raise money now. So if you were only to get my check and you got, say, I invested 200, 400, that's our average ticket size, between 200 and 400,000, and you didn't get your 2 million, would you be able to sustainably run? If yes, why? Well, if your business model makes sense, if you're generating revenue, your economics work, cash flow, you'll be cash flow positive in 12 months, in 24 months. I want to understand your runway, how long you have. And so it sounded like you hadn't exactly figured out why or exactly how much you want to raise. I would first build out a financial model. It doesn't have to be fancy at all, but just a financial model that has all of your expenses and all of the anticipated expenses. And then also, as you're growing, however those expenses grow, and then whatever, and you want to raise for about 18 to 24 months of runway. So when you're asking for an amount, it should last you, given all the expenses and the growth, optimizing for growth and that's that cash flow, even if you do or do not start generating. I need to know that whatever you're asking for is going to last you probably 2 years, especially in the time period that we're in and when we have such an unstable and unpredictable market. So that's just to answer that question. So next time you come, please be able to answer, I'm asking for this much money. It's going to go to these things. It's going to last me this long. And then also the competitive edge. I don't understand the economics or the nuts and bolts of this business in this space, but I needed a little bit more hype. There was a lot of humility in your pitch, which is great. Feel free to brag about yourself. Like, why are you the greatest person to be building this solution? I want to know, why are you the boss? Why is your team the dopest team? Why are you going to blow everyone else out of the water? You can say these things. Obviously nothing fictitious or embellished, but I'm sure that the truth of your exact resume has something promising in it. So feel free to brag a little bit more. And then the second to last one is regulatory. So I'll bring that up again. I don't understand. All I know is that there's been a lot of regulations coming around blockchain and digital currency. So why are you not going to be regulated? And what sort of licenses do you have in place globally and within your core market that's going to save you from that, or that's going to prevent you from getting in trouble? And then the last thing is the 30-20-10 rule. So 10 slides, 20 words on a page or less, and 30-point font. So Eduardo, the guy who knows crypto, he knows this space, at first talked about or mentioned that it was a little dense. He knows what he's doing. For those who have no idea about this space at all, it seems even more over our heads. So for me, if you can keep it really simple and use fewer words. And there's two decks you have. One, once you have venture capitalist interest and once people are very engaged, that one can be super comprehensive and have all your details. But the one when you have a 5-minute pitch and you're just shopping, keep it simple, keep it high level, and keep it just quite basic. But overall, it was great. And if you incorporate that stuff, I'm sure that you'll be on the right path. Thank you.
And to Maya's point, to general audience. So you may not know who you're going into. You may not know all of their background. So Maya brings up a good point. She may not have the background in gaming, but she understands business. It's what she does. She invests in companies. So she understands what makes a good company. But someone like Eduardo knows more about gaming, he's going to ask for more details around those types of things. But anyways, I want to give you a big round of applause, a little golf clap here, because you did a great job, Roberto, getting up and sharing this with us. I know we gave you a ton of advice, and I hope you take that, refine the pitch, and come back along with go out and talk to more investors. And we wish you the greatest success. But like we do here on every episode of VC TV, we want to make sure you get a chance to shout out. So what's the website that everyone can go to find you online as we close your section out here?
Yeah, just enter in SpotCash1.1, SpotCash.1, and you can follow us. And there you will find more information about our team of 9 people at this moment, and test our product, our exchange, our social network, our wallet, and what we have built until now. We are ready for the market. We have already a public product on the market with many good professional athletes.
Wonderful. So everyone definitely check out Roberto's product. Apologies, Eduardo. Roberto's project. Do check it out. Roberto, thank you. We're going to go back now to our investors. Guys, it's the second half of the show. It's lightning round time. As we're coming to close here on the show today, I got a few questions I want to get out that will give our audience even further advice. So Roberto, if you can go on mute, please, so we don't have any echo there. Now, investors, here's the deal. So the first question, I want to get back to ICOs, STOs, IEOs, I-something O's. We talked a lot about venture capital today, but let's talk a little bit about these future fundraising vehicles, right? There's been venture debt, there's bridge rounds, there's all these different stages that we've looked at and talked about on previous episodes. Mark, Eduardo, coming to you two first. STO, IEO, ICO, whatever it's being called going forward. Is this a new opportunity for investment capital? You two are experts in this. I want to come to you first. So Eduardo, let's start with you. Mark, I'll come to you afterwards.
Yeah, absolutely. I mean, we have seen a tremendous increase in the number of investors, and particularly from Asia, by the way, when it comes to investing in ICOs and STOs. We actually are in the middle of 2 of those, new investment vehicles. I mean, we are in the middle of an ICO for a company that operates within the technology sector, and particularly within the global hospitality and experiences sector, actually. And we have also launched our own cryptocurrency. And also we are in the middle of an STO for an industrial business, which is going to be also quite innovative when it comes to to typical STOs, and we are going to launch this one in the US and also in Europe. So I mean, right now it's probably not the best time of the last I would say couple of years in order to raise capital through these kind of vehicles. But actually, I mean, right now when it comes to proper straight equity issues or bond issues, actually, in order to raise money, we definitely believe, and we are very optimistic for the future with these kind of alternative ways of financing. Definitely a lot of interest, particularly from Asia, also in the US, starting to raise much more money through these kind of vehicles. In Europe, still they fall behind a little bit when it comes to raise money, because they tend to be more conservative. But definitely, I mean, we believe that this will continue increasing over the next years, I will say, definitely.
Mark, to you, same question. STOs, IEOs, ICOs, is this still a viable option of fundraising?
Blah, 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 whatever. Yes. No.
Exactly.
So,
the O's.
So, yes, whatever. So the short answer is, I think having financial instruments that give far more people access to investment vehicles, democratizing investment opportunities in general is a good thing. And we can see it with like Robinhood in the traditional stock market. People are going in there. If they make smart decision or not smart decision, that's a different topic. But again, being able to participate in a global decentralized financial markets, I think that's a good thing. So having said that, the foundations of investments are not changing. And unfortunately, a lot of people, they just they don't do their homework. When I started angel investment, I asked an experienced investor next to me and said, so how long do you do this? And he said, 10 years. I said, okay, what did you learn in those 10 years to predict the success of a project or a company? He said, well, when I started, I thought that the success is determined 20% idea, 80% team. And now 10 years later, I think it's 2% idea and 98% team. So, and every time over the 10 years, I ignored that advice, I lost money. So, so it's really about making sure you have the right people in place. You do background checks, you see what the network looks like, what the advisors are, how willing they are to learn. So you're making sure you have the right team in place. In the crypto space itself, though, what happened is, as a traditional investor, what you do is you see a lot of well-meaning teams that are not capable of pulling it off for one or the other reason. What happened since 2017, 18 is, in addition to the well-meaning but incapable teams, you see a huge amount of scammers. It has been unbelievable. The bar of quality of pitches of being investable in the blockchain space is very, very poor. What you hear is most of this is insulting, to be blunt. So we are really looking for good companies. We love good teams. We want to invest, but it really needs to make sure the bar is at least as good as in all the other industries of what we are seeing. Right team, right investors, right advisors, right infrastructure, getting the basics right, understanding how a business works. So all of those things need to be there. And then I think we can talk about the idea and the valuations and all kinds of other things. But there's really a lot in our blockchain industry. There's still a lot of to go versus other industries.
Absolutely. All right, next up, Maya. Quick insights and advice for companies that are looking to enter the market in Africa, or investors as well. So kind of a two-sided question. If founders looking to enter and expand into the African market, or if investors are looking to start investing in the emerging markets throughout Africa, what advice do you have on both sides?
Firstly, I would say you can never enter the African market because it's 54 countries and it's really big and it's all different cultures and all different regulations. And like a lot of times people are like, oh, Africa is like North America, or it's like, Central Europe, or it's like, these places. But, Nigeria, we have Nigeria here. I explained the wildness with the regulation. There's been a 30% devaluation in local currency in the last few months. There's a 200 million population with 20 million people in the city, Lagos. Next door is Ghana. There's like barely over 1 million people in the key city. It was just nominated as the strongest currency next to US dollar this year. And it has incredibly stable regulation and is an incredibly safe place to be. Next to us, a little bit further is Côte d'Ivoire, Francophone Africa, and Senegal, and it's totally different language, different lifestyle, the consumer preferences. It's totally not as digitized, tech enabled as Anglophone as far as West Africa. So one, I would say, be wary of the Africa approach because you'll sink and fail, period. As somebody if you're not African, you don't have core connections and an office here, I would say for people looking to expand their business into the African market, one, find a very well diligent, somebody well, not somebody who you emailed who's like, yeah, pay me this and we can set up a JV and I'll, just send me your products and I'll distribute them. No. It's still use your sense. Do your research diligence, come on ground so you can understand the market dynamics itself. And so when, you launch your business and somebody says, I can't can't send out any foreign currency. You'll be like, oh, this person's trying to scam me. But if you're in the actual market, you'll understand why and what happens, or any of the other things. Oh, the product's been sitting at port for 3 months. And they're not lying. These things actually happen. You need to understand why and have the connections to resolve them. So 1, come on ground and visit the place where you want to launch. 2, never launch without a local JV, somebody on ground, because of the things that I had talked about before. And 3, make sure it's not just a general partnership with a competitive business. Make sure it's deeply, fundamentally symbiotic, as in they have absolute incentive to promote your business just as much as their own. Anything other than that is going to fail in the market. Africa is already, across the continent, we are already dealing with so many infrastructural, so many things that could cause business to go haywire already. To have the burden of somebody else's bottom line that's not aligned with what I have to focus on my day-to-day, I'm going to forget whatever you're doing. So that's as far as on the business side. Make sure it's a strategic partnership and you understand the fundamentals of the other person's business that you're partnering with on ground, and it's deeply inherently symbiotic. As far as on the investor side, for investors looking into the market, again, co-invest. Our investment firm, how it's structured is, I mentioned before, 80% of our limited partners run later stage global firms. They use us to source deals and then are able to maintain our pro rata in later stage rounds when they want to take over these deals. Find local partners on ground who understand the market dynamics, who understand the Africa context, who can get the founder out of those local problems, because there will be, I promise you. And then you can focus on the big ticket transactions, the getting potentially international acquirers, et cetera, et cetera. So it's necessary to have both local capital, typically smaller tickets, as well as those international investors on ground. Every year since 2016, Africa has doubled the amount of the amount of venture capital dollars that came into the African market. Last year we were at about 2 billion. This year, I don't even know what's going on with COVID. But to that said, a lot of international firms are starting to invest. Y Combinator has well over 20 deals they've done, 500 startups, Techstars, Greycroft, Social Capital, WTI, even Andreessen Horowitz did Branch in East Africa. So a lot of these guys are strategically co-investing, but they have local partners. They do their own diligence. They come here, work with local partners. That's all I got to say.
Enough said. Maya's the person to call at any points of this. That's I think the summary there, but great points, Maya. Mons, to you, same question, but for India, quickly, what advice do you have for companies looking to enter the Indian market, as it is very large, 1.3, almost 1.35 billion people right now, just behind China at 1.43 billion. Great opportunity, but a lot happening. So what advice do you have for founders looking to enter the market?
So it boils down to who your customers are. So 1.3 billion, it's great if your business, and the business model works around MAU, monthly active users, daily active users. It totally depends on the business model as to how you're really going to make money at the end of the day, right? So if it's MAUs and DAUs you're looking at, then obviously you can, go by the numbers in terms of, 1.3 billion people, huge opportunity. There's a smartphone revolution which has happened. We skipped the landlines. Just Geo itself, which raised, $15.5 billion plus in the past few months, it has a user base of 400 million users. And actively, I think, we would be looking at something like 900 million users, say within, by 2021. I'm hoping these stats are right. By 2021, we should be having 100 million users. So if your business is looking at them in terms of not actively making purchases, but, you're looking at them as, active users of your product, and then you try to monetize via some other mechanism, great market. But if you're looking at, say, a service which is again looking at, very specifically someone who's going to make in-app purchases, say you have some other mechanisms kicking in, then your user or target base shrinks down to almost 3 to 5%, or it might be even 3 to 4% of the entire 1.3 billion population which is there. So any business which comes in, you have to be very cognizant, what the business model is, how you're going to go about it. I'll share the same points as Maya, that, you have to be very, very specific in terms of, how you're really going to, what's your go-to-market strategy? How are you really going to, work with the different states over there. So it's the same case over here in India. We have a lot of different states. How are you going to tap into the culture? How are you able to tap into the user base? Are you going by demographics? Are you going by state? So everything, you can have a broader vision, but definitely you'll have to do the grind in terms of sitting down and planning out how you're really going to make use of that market out there. So that's for the businesses. For investors, I think it's a huge market because if you look at anything which happens right now, there's a lag which is happening. So if you look at, say, if you look at venture capital, 70s, 80s, it was there in the US. 90s, it started in India. So we have some sort of things kicking in after a lag. And at one point in time, all the technologies will percolate all the places. So as an investor, even if it's a tough time right now, if it's COVID or whatever it is, you do know that there are some things which you want to see in the world out there. It could be augmented reality, virtual reality, AI, any of the technologies which for sure are definitely going to be there. And any of the smart investors would be looking at partnering with the best guys in those in the different ecosystems to see how can you get a share of the market over there. In terms of just specifically talking about AI, if you look at just the sample data sets where you're trying to get get out the bias in the algorithms. India is a super diverse place to really go after AI in terms of healthcare, in terms of other things. And if you can really tap into the market and work with the right kind of players, you do have a chance to really build an AI which cuts across data, a sample data bias, and you build something which works for a larger population in the world out there. With taking sample data sets for just specific populations. So that's one added advantage. And any investor, there are limitations in terms of funds, the fund life, 10 years, 11 years, 12 years. Some of the investors, someone like Leafixel is now looking at 15 years. And in India, it is a tough market. You will need to see how you can work around and have more patience and really go down after the players who are going to really just grind it out and win. You need to find out people who are not in it for just the money part of it. They're willing to take a few hits and they can keep going
and invest locally as well. So I apologize, Monty. I gotta keep going. So you got great points. There's a lot more we're going to talk about. We're going to welcome you back to talk about India and investing directly there on another show. But it's again, to Maya's point, local. Go local, invest local, spend time locally. If you don't, you're doing yourself, your company, and your investors a disservice. Gary, last question to you before we come to closing thoughts. Quickly, someone wants to get into artificial intelligence. They want to build, they want to invest. What's the one piece of advice you give them to get started?
Give me a phone call.
Done. That's the man. Or reach out to him on LinkedIn. Yeah, he is 100% available.
GSD, I'm happy to talk about it, but I'm happy. It's a deeper discussion than just, one thing.
It is. And I apologize, we don't have time to go into it today. But again, VCTV, we did 2 episodes yesterday and the day before with Gary about artificial intelligence and deep technologies. We go super technical into that. So definitely tune in. Investors, thank you so much for your time today. I want to make sure everyone gets a quick closing thought in on any advice you have for founders as they are fundraising over the next 6 to 12 months. And then where can everyone find you online? So Eduardo, let's start with you. Advice for founders over the next 6 to 12, and where can everyone find you online?
Yeah, first of all, I would like to say a big thank you to all the LATOKEN team, also to all the panelists, Kylie, Lena, also for a tremendous job again. And very pleased to be here. Actually, yeah, I mean, my recommendation for founders is that they have to be, aware that the current situation is probably not the best in order to raise money, but that however, we are very optimistic for the next months. So definitely, there are tons of projects, good projects that will be properly funded over the next months. And yeah, I mean, you can find me online also on LinkedIn. So just write my name and you will find me definitely. So very pleased to be here and hopeful to see you again soon.
Absolutely. Mons, where can everyone find you, and any closing piece of advice you have for the audience?
Sure. Thank you, Kyle. First things first, thank you and shout out to the entire LATOKEN team. It's incredible to be here. Shout out to all the panelists. I learned a fair bit today and I look forward to stay in touch. In terms of coming to the founders, the next 6 to 12 months, look at it as an opportunity. I mean, like, because of COVID, you have the opportunity to really, get some incredible talent across the world. I don't know whether it's going to be in the founding team or otherwise, but everyone is looking to really make a couple of things happen, and there might be pivots, there might be even opportunities which might be shutting down, so people would be looking to switch. So if you can find great talent and motivate them to join your teams, that's something which can work for you. And you can definitely get some great talent out there, just trying to put a positive spin on what's happening and what will happen over the next 1 to 2 years. And that's it. I mean, like, you have one life, just make it count.
I love it. Absolutely. Maya, to you, closing thoughts on advice, and then where can everyone find you online?
Yeah, first I'll start with the latter. Everyone can find me online, or people can find the fund if you want to apply, and you have to be an Africa-based investor targeting the African market at www.ingressive, INGRESSIVE, capital.com. www.ingressivecapital.com. You can also reach out to me. I'm not that great with email, to be honest. I'm much better with Instagram. So you can reach me at Mayanator, MAYANATOR, Mayanator. And I respond to 100% of my DMs, no matter what you write. Don't send me novels. I don't really like those. I'll still respond to you, but please just don't send me novels. As far as my advice for founders, as I say, so we just closed $10 million, and I say this a lot. I started my VC fund because no firm would hire me as an analyst. And I was like, hey, I know how to source deals and I have connections. Like, I want to work for your firm. And people were like, you're really good at hosting dinner parties. Maybe you should like be an event planner. Or like, I don't think you'd really catch the finance thing. Or like, all these sort of whatever biases that people have. And so I was like, you know what? I could probably raise my own fund. And then I did. And so I just want everyone to remember and recognize the fact that no matter who you are and where your background is, and if there's nobody who looks like you in the industry where you're building, and there's even nobody in the industry you're building, period, it doesn't matter. And you can pioneer that space and build your character and build your story into the narrative. So whoever you are, wherever you're from, get started.
Damn right. Mark, to you. You got to follow that up, because I should have closed with that. Maya, I apologize. Yeah. I should have had you be in the close. So Mark, Gary, you got a lot to live up to. Go for it.
I don't want to step on anybody's toes, but Maya definitely rocked it today. So and what's very inspirational. I have 3 daughters, so it's very inspirational to listen to you and see this.
Thank you.
Very, very, very nice. How can people follow me on Twitter? Mark M. Eberstein. So like Mark Müller Eberstein, Mark M. Eberstein.
I'll put in the show notes for everybody too. Don't worry, I'll put in the show notes.
Best way to follow and to stay in touch for sure for the broader audiences. I would highly recommend to all the entrepreneurs to leverage the free resources and guidance that is out there for startups. There's so much information. I mean, our Alliance of Angels, the American Angel Capital Association, there's so much TechCrunch, good advice on how to do pitch decks, how to structure things. There's really no excuse for not being well prepared before you get to talk to investors, because it's all there. I mean, there's sample decks for people that have done this. So at least getting the basics right should not be an insurmountable hurdle for entrepreneurs today. And yes, we are living in a very changing world. On one side, it's an opportunity to talk to global audiences, global customer audiences, global investor audiences. And I think, as Maya said, and I think Gary mentioned it as well, and Monsi, be aware of the details of the projects you're looking at. And it's local, it's knowledge, it's network, and relationships, and making sure you have all of those things nailed down. And it's an exciting world I think we're living in, has always been, and it's going to be a very transformational 2-3 years in front of us.
Absolutely. Gary, close us out.
Yeah, so I've been through this many times, 15 times. When I did my first company at 21 years old, people said you couldn't do it. I just came out of graduate school. I didn't have any credit, and I did $9 million in sales in less than 2 years. And I didn't have a clue what I was doing. It was interest rates were through the roof. People said it would never work because it was a project building houses, and they said it couldn't be done. And I said, I'm going to do it differently, and it worked. With Click Software, as I said, they said we were going to go out of business. It was company coming out of Israel. Nobody was really doing things with Israel at the time. Came to the U.S. We rocked it, sold for over $1 billion. When I first went to Russia, I lived in Russia on and off for 14 years. And when I first went to Russia and was working with Russian scientists on things like algorithmic math, they said they didn't have the capabilities. Don't trust them. Don't this, don't that. And here we are, $700 million company later. It's incredible. So when people say you can't do it, that's when I really want to do it. So believe in your dreams, stay positive. The glass is half full and not half empty. Don't let yourself get into the negative. Focus on the positive parts in your life. Focus on what you can do and think about getting that done and visualize. So go for it. And as we say at my company, I named it GSD for a reason. So get shit done.
I don't think there's anything else I can add other than look to the stars, as we talked about yesterday, and, go bigger than you think you can, because it is possible. It definitely is possible. And everyone here is an example of that as well. And to our investors, guys, thank you so much. That was an inspiring closeout, one of the best that we've had here on VCTV. So thank you. To your audience, thank you so much for tuning in of today's episode of VCTV. We greatly appreciate you. As we've said, we're all available online 24/7, whatever instant a social network it may be. Reach out to us, connect. We'd love to hear more. I'd love to answer questions and have conversations with each and every one of you. Thank you, Roberto, again, for sharing your project with us today. Thank you to Elena and to the entire LATOKEN team for making VCTV possible. I'll put as much as I can of the show notes in today for all of you to follow up with each of our investors, but we are here for you. And again, thank you to our audience. If you like what you heard today, click subscribe, give us a thumbs up. Investors, thank you. Elena, LATOKEN, thank you. I'm Kyle Ellicott, your host. We'll be back here Monday morning for another edition and a full week ahead of VCTV. Everyone have a great weekend. Thank you, everybody.